Hi, it's Mark Cunningham at Grace Property Management. So we've seen something recently in our real estate and property management company, a problem that clients we work with who are real estate investors, and most of them own condos, that are having this problem. Sometimes they think they have insurance on their condo, but they really don't. And you usually don't find out until something catastrophic happens. A fire happens in the complex, or there's an insurance-related issue, only for the condo owner to think they have insurance and they don't. So let me share with you just a couple recommendations and thoughts for you as a real estate investor if you own a condo that you want to ensure you have in place to protect yourself should an insurance claim related aspect happen. Now, for those people that think they have insurance, they do have a type of insurance normally, but that's called a master insurance policy. What that means is the condo complex that you own in, the complex itself, the homeowner association, the group, there's a master policy on the entire complex. And that master policy covers things like the physical structures of the buildings. So if the entire buildings burn down in the condo complex, the master insurance policy carried by the complex itself would rebuild the buildings. That's great. Covers the physical structure. It covers the common areas. So if the parking lot needs to be replaced, or if there's an issue in the parking lot, the master policy covers that. If there's a playground or a swimming pool, covers those types of things. And liability for the common areas. So if somebody slips and falls down the steps of the common areas, the master insurance policy covers that. Doesn't cover your personal unit though. And this is where I think a lot of real estate investors kind of fall short on this, because we think that the master policy extends to our individual unit, and it does not. It absolutely does not. So that means if you own a rental condo in a complex, that you already have a master's policy, but that doesn't cover your individual unit. There's a couple different types of coverage that we recommend you as an owner of the condo make sure you have on your property. Number one is replacement protections for the interior real property. Real property means like the refrigerator, the appliances, the carpet is considered real property, hardwood floor, even wall coverings, even walls could be considered real property. Because if the property burns to the ground, the HOA is going to come back in, the complex is going to come back in and rebuild it, but they're only going to build it up to your walls. They'll probably even stop at the studs. They'll put studs in, then they say, there you go, we're all done. You have to go in and put the walls typically in. You might have to put lights in. You're going to put carpet in, cupboards, appliances, sinks. All of that is on you as the owner. That's going to come up under your specific coverage. So number one, call your insurance agent. Make sure you have coverage for the replacement protections of the interior real property. Number two option would be replacement protections for contents. Now, if you rent a condo and it's vacant, you don't provide any furniture, this would be optional. This is the only one of the four that we're going to talk about here that's optional. You don't have to have this, but it would cover contents if you are providing a furnished unit. Contents would mean not just the appliances, that would be real property. Contents would be things like the bed, the furniture, anything you're providing to your tenant. If you're not providing that to your tenant, you probably don't need contents insurance, or at least a very small dollar amount on that. Coverage number three would be personal liability. This is the big one. This is the important one, because if your tenant slips and falls and hurts themselves, or something happens to them and that tenant sues you as a landlord, that master policy for the complex does not cover you. You're going to need to make sure that you have personal liability protection to cover you as the owner of the property. So if they slip and fall down the steps and break their leg and they sue you as the landlord because the banister was loose, that's where this type of coverage comes in. And last, but certainly not least, is loss assessment protection. I own some rental units myself. A couple of them are condos. I got an assessment letter from my HOA not too long ago, and it said, hey, we have to go in and replace the roofs of all the buildings, and we don't have enough money to do so. So there's a special assessment charged against all the owners, and it was like $5,000. So every owner had to write a check to the HOA for an additional one-time $5,000 fee. Why? Because they have to replace their roofs. Well, fortunately, I have special assessment or loss assessment protection coverage. Loss assessment coverage. What that means is my insurance company will pay for that $5,000 roof claim because I have loss assessment protection. This is very, very cheap to add to your policy, but it's very important because typically if a condo complex puts together a special assessment, they can get very expensive very quickly. So if you own rental property and it's a condo or townhome, anything like that there's an HOA involved in, please contact your insurance agent. Make sure that they add those types of coverage to your policy. It's very affordable, but it's necessary to protect you as a rental landlord in Colorado. If you have other questions, reach out to us at Grace Property Management. Jump on our website, rentgrace.com. We're happy to help in any way we can.